Hello everyone, welcome back to the channel. In the previous video, we had studied about profit and loss appropriation account, partners capital account and partners grant account. So today in this video, we will study about some items of profit and loss appropriation account, and we will discuss about what kind of questions can come in the examination related to it. So let's get started.
Before going to start, let's once again look back at the profit and loss appropriation account in brief. Profit and loss appropriation account is prepared to show how the company appropriates or distributes the profit earned during the year. It is an extension of profit and loss account, and it is prepared after the preparation of profit and loss account at the end of every financial year. The purpose is to allow the adjustments to be made to the profit so that the final income can be divided among the partners as per the agreed terms. It is a nominal account, which means all the expense items of the firm are debited and income items are credited. Okay, which items to be credited? So our first entry start with profit and loss. That is our opening balance, which we transferred from the profit and loss account. So next, whatever the income of the company is, we credit it, like drawing and interest on drawings. And in the debit side, which items do we debited? Whatever the company's expenses, we debited all these items, like net loss, that is again transferred from the profit and loss account if company incurred loss during the year. Next is transfer to reserves, salaries to partners, interest on capital, commission to partners. After distributing all these items, the profit that is left, we call it divisible profit. The balance of the account, that is credit minus debit, is transferred as the remaining profit either to the capital account or to the current accounts of the partners in their respective pre-decided profit distribution ratio or according to the shares. So in today's lesson, we will see how interest on capital, partner's salary, commission, drawing and interest on drawing are calculated. So in profit and loss appropriation account, here are some items like interest on capital, partner's salary, commission, drawing and interest on drawing. In this, we will study about how these items are calculated. So first, let's start with interest on capital. Let's understand it is in simplest form. Suppose you and me join together to form a partnership firm to run a business. Each of us put in rupees 1 lakh each, so that the starting capital is rupees 2 lakh. When a partnership deed is drawn up, we can add a condition called interest on capital to be payable at say 10% per annum from the firm's account to each partners. This is a fixed interest the firm pays to its partners as per annum on 1 lakh each partners has put in. We to calculate 1 lakh multiplied 10%. This is an interest amount of rupees 10,000 each. This would be treated as part of expenses in the firm's account. Beyond this, if the firm makes a profit, then partners get a share of profit. Otherwise, they will always get this interest on capital they have put in future. If additional capital is brought in by either partner, then he can claim interest on it too if the memorandum is so drawn. In other words, we can say interest on capital is the interest paid to partners or owner for providing a firm with the required capital to start a business. This example proved here that we have used that capital for the whole year. How much is the interest for the whole year? That is rupees 10,000, which we have calculated. So here are some conditions for calculating the interest on capital, or you can say capital of interest. Let's get it to understand with some cases. Case 1. Suppose a partner introduced rupees 2 lakh in the starting of the year. If he uses the capital for the whole year, then how much capital of interest will be charged? That is 2 lakh multiplied by 10%, that is 20,000. We get interest on capital 20,000 if he uses the capital for the whole year. Next is In the condition 2 or case 2, so initially we had a capital of rupees 2 lakh. After 6 months, he invested rupees 1 lakh more, and now after completion of 6 months, he will introduce further or additional capital, means he started business with starting capital of rupees 2 lakh, and after 6 months he introduced additional capital of rupees 1 lakh more. How much total capital will he have now? That is rupees 3 lakh. Now think of it as, if it was not a firm, it would have been a bank instead of firm. If we deposit 2 lakh in the bank, then the bank will give us interest on that 2 lakh. And if we deposit 1 lakh more in the bank, then bank will pay interest on that additional amount too. Now the interest of the 6 months that is being created here will be there. This is interest only for 6 months. After this, interest on 2 lakh will be not given. We will get more than that. Why we get more? Because we put additional capital. Now this is the next 6 months. We will get interest on that, and what is the next amount is 3 lakh. So we will get interest on 2 lakh for the first 6 months and interest on capital on rupees 3 lakh for the next 6 months. Now here is what you needed to understand, that we will get interest over the first 6 months, and also we will get separate interest on the next 6 months as well. So in case how much interest will be made on the first 6 months on 2 lakh, that is 2 lakh multiplied by 10%, that is our interest rate, multiplied by 6 by 12. So if it was 4 or 5 months, we would calculate the interest accordingly. So it is rupees 10,000 for the first 6 months. Now our capital is not 2 lakh, now our capital has become 3 lakh. Interest will be made on the next 6 months on total of rupees 3 lakh. We calculate it 3 lakh multiply with 10%, that is again our interest rate, multiply with next 6 months, and it will be rupees 15,000. So how much interest do we have in starting? That is rupees 10,000, and after 6 months is rupees 15,000. So our total interest will be 25,000. So if we introduce any capital in the middle of the year to calculate the capital, in case 2, the way a partner can introduce additional capital in the company, in the same way he can also withdraw some amount of the capital from the firm. Now the question comes that if partner withdraws some money in the middle of the year, obviously he can even withdraw some money. We will understand with the same case. Initially he invested rupees 2 lakh. Now it comes that after the end of the 9 months he has withdrawn some money like rupees 50,000. So what effect to the capital after he withdraws the money? Now see here that till the first 9 months the amount will remain the same. Now if he withdraws money after 9 months, will we add or minus in the capital? We will minus that amount from the capital. Now after withdrawing rupees 50,000, we will be left with rupees 1,50,000. So the next interest that will come on the left amount, that is rupees 1,50,000 for the next 3 months. Now we don't have initial rupees 2 lakh as a capital. Then how can we get interest on 2 lakh, right? So if we invest more capital, we will get interest on additional capital too. So in the same way, when the money is withdrawn, then the company pay interest on that amount as much as it is left. Now let's see how the interest is calculated in this case. Interest will be calculated at 10% on 2 lakh for 9 months. Then our interest will be 2 lakh multiplied by 10% multiplied by 9 by 12 is equal to 15,000. Right? How much capital did he have when he withdraws some amount after 9 months? That is rupees 1,50,000. Now we calculate new interest on rupees 1,50,000, the capital we have left. That is 1,50,000 multiply 10%, that is our interest rate, multiply by 3 by 12, that is our next 3 months. Then after calculating we get is 3,750. So we have a full year total interest, that is 15,000 plus 3,750 is equal to 18,750. So in this way the interest on capital is calculated, because something is added to the capital and something is minus to the capital. Now let's talk about another case which is very important in interest on capital. Suppose there are two partners, Jack and Alex, in the beginning of the year, means on 1st April, because our accounting year is start with 1st April every year, right? Jack invested rupees 4,50,000 and Alex invested rupees 6,50,000. They decided to share the profit equally. They decided after 6 months. After 6 months means October, in the beginning of the October month, that is on 1st October, their total capital should be rupees 10 lakh each. Let's try to understand this case carefully. First, total their initial capital, that is 11 lakh. So for the first 6 months, their capital become rupees 1 lakh. After 6 months, they decided that their capital should be 10 lakh. That capital should also be in such a way that they have contributed equally. Equally divided means 5 lakh of Jack and 5 lakh of Alex. You see how much capital did Jack put earlier? That is rupees 4 lakh 50,000. Means that now Jack will have to add some money so that his capital become rupees 5 lakh. So now Jack will have to add rupees 50,000 more in his capital, right? Next, you see here how much capital of Alex has, that was 6,50,000, whereas he should have rupees 5 lakh. So what will he have to do now? He has to withdraw some money so that his capital become rupees 5 lakh. So he will have to withdraw rupees 1 lakh 50,000 so that his capital become 5 lakh. Now we have to see how the interest that Jack and Alex will get is calculated. So the interest of Jack will get according to the first 6 months, means 1st April to 30th September, will be given to him on rupees 4,50,000. That is 4,50,000 by 10%. We assume that the rate of interest multiplied by 6 by 12, that is the first 6 months. After calculating, we will get 22,500 is the interest on capital. And next interest will be calculated on 5 lakh for the next 6 months, means 1st October to 31st March. 5 lakh multiply 10% multiply 6 by 12. After calculating, we will get 25,000. So the total interest of the capital of Jack will be 47,500 after adding the interest of first 6 months and interest of next 6 months. Now next we talk about Alex, how much interest he will get. Alex has capital for first 6 months, that was 6,50,000, right? So he will get interest on this amount. We calculate it 6,50,000 multiply 10% multiply by 6 by 12. So his interest on capital is 32,500 for the first 6 months. But after 6 months he withdraws rupees 1,50,000. So his capital become 5 lakh. Now he will get next 6 months interest on capital on 5 lakh. Okay. Now we will calculate Alex interest on next 6 months. 5 lakh. 5 lakh multiply 10% multiply 6 by 12, that is 25,000. Now we will add both interest of Alex and it becomes
57,500.
So sometimes question like these come in the exam, in which sometimes capital is added and sometimes capital is withdrawn. Okay, next is tell you one more important thing. Whenever we calculate capital, we always look at the opening capital, means how much capital was invested in the beginning. Here the most important thing for you to remember is that whenever interest on capital is calculated, it is always opening capital only. Now we have to see how the opening capital is calculated. Now let's remember a little back. We used to prepare the balance sheet in the financial statement. Take any financial ending like 31st March 2022. One is liability sides. One is liabilities side and other one is asset side, right? So on the liabilities,
closing capital.
in this we used to add additional capital if there was any additional capital. Then we added net profit if we had a net loss. We used to do minus, and we used to minus any drawing from it. And lastly, whatever balance we have with us, we do call that was our opening cap. Similarly, we have to do the exactly same. If the question is asked whether to pay interest on capital, whenever the interest on capital is paid, it is always given to the partner over and above the opening capital only. Sometimes in the question you are given closing capital and you have to calculate the opening capital. So for that we have to apply a formula, which is opening capital plus additional capital plus net profit or minus net loss. If loss is given, then minus drawing. Then after all these calculation we get our closing capital. But if the closing capital is given in the question, then formula will be opening capital is equal to closing capital minus additional capital minus net profit, and if loss is there then it will plus accordingly and plus drawing. So our opening capital will come. So here the complete maths formula is being applied, that whenever we shift from LHS to RHS, whatever is plus it becomes minus, and whatever is minus it becomes plus. So this was our opening capital. Now one more important thing, many times the question is asked that calculate the opening capital along with the interest on capital, and interest on drawing is also given in the question. So how do we calculate the opening capital? So now we look at the same formula, then we will add interest on capital with additional capital because it is a part of capital, and minus interest on drawing. So whatever is the interest on drawing, that will be given. Basically interest on drawing is giving through the drawing itself. So now we can make a little change in this formula too, right? We add interest on capital and minus interest on drawing, so our opening capital will come. So this is all about this topic, interest on capital. We will discuss other items of profit and loss appropriation account in the next videos. Keep watching the next videos for the next topic.